watching our show yesterday, man. They did a big thing on how Social Security is going to need to increase the cost of living adjustment there. Oh man, it was meant to be then. I would know. No, but they were like 6% or something. I just said that yesterday. I don't know if they're just got a creepy eye on us or something. I don't know. I'd sure like to know who's watching if it is. Because if it was Morgan Brennan, you can watch. You know, I would invite her. I like Rick. Yeah, I like Rick. I think it would be a fun conversation. But Morgan would be better. I like flying too. Space. Aviation. Hey, welcome to the Closing Beat, everybody. Happy Thursday. How we doing out there? Hope you're having a good day. Wine and Wealth tonight, by the way. I just finished sort of all the data that I want to share. I was shocked. So tonight's class is actually going to be, we're going to rebalance at some point, right? Your 401k or TSP. Well, when is the exact best time to rebalance, and specifically why? So we went back 25 years, went through all the data. We said, what if you never rebalanced? What if you rebalanced every 5% that you were off, 10% that you were off, meaning your portfolio was off, monthly, quarterly, annually, and broke through all that data. And I thought we were going to find one thing, which is what I usually suggest. Turns out we found another thing. So we'll be sharing that here a little bit later at 8 o'clock. We do those kind of things for our clients on Thursday nights. We call it Wine and Wealth over here in the Speakeasy. Soon to be torn down, by the way. This will be the last, maybe the last episode. As you can see, our studio is under construction. We are tearing down and getting ready to move the ship, so to speak. So that might be the last one before all the alcohol has to come off the shelves, and we've got to pack this thing up. So I hope you'll join us for that if you're one of our clients. It will also be available to research members. If you like, you can join our research site. Just a real simple site where we kind of cover some of the data and cool things that we come up with, any market-related data research, and soon our tools will be available as well. So we've got potentially our new data provider plugged in. We just got to get through that. If you're a client, it's free. If you're not, it's $13 a month if you want to join, and you control the subscription. We don't play any games there. Otherwise, I'm sure you'd see people online saying, hey, those guys ripped me off. We don't do that here. So hope you enjoy that if you decide to join. The markets today, kind of a summertime thing, but what have we been saying? You have just a handful of stocks lifting the market. What happens if they take a break and everything else is already starting to look a little bit weaker there? Well, that's kind of what we saw here today. Let's dive over to it. What happens if everything else gets a little bit weak? So 1/3, if you look at the S&P 500 over the last 1 month, 1/3 of the performance, which has been pretty good, was caused by Apple. So 1/3 of the performance due to Apple. So if Apple had not done what it had done, we would be 1/3 less higher than we currently are. If you add in Microsoft, that's another 20% of the market's performance. So essentially half of the market's performance has come from those two stocks over the last month. You can throw in Alphabet as well. I think it's another 9% or so. And so what do we see today? They all took a break. They're all overbought. They're ready to pull back. They're attractive if they do pull back, but in the meantime, the index itself will start to show back. So you can assign any headline that you want as to why the stock market pulled back today, but the underlying mechanicals of how this all works, it's not a conspiracy theory or anything, is what's actually caused the stock market to fall there. So I bring that up because remember I've been saying we already have sectors of the market. The S&P breaks into 11 categories, and those 11 categories are like financials and materials and industrials and tech and stuff. Well, tech is doing well, and tech-related industries are doing well, but you have energy already pulling back there, right? So energy's already pulling back. Metals and mining, not a sector, but that's already weak as well. You got home builders, not a sector, but definitely involved in the S&P 500. They're pulling back. Basic materials pulling back and already weak in the short term here. Financials have been pulling back. Industrials have been pulling back. So you already have this weakness. The leaders at the highs start to show a little weakness. You've got a recipe for a broad market to have the day that it did, which wasn't horrible, but still a little bit of a pullback there. That being said, if you look at the S&P 500, if it does pull back or continue to pull back, then it would be considered a buyable pullback. And I can't tell you what to do, but I think traders themselves would look at this as a buyable pullback because the underlying strength in the economy, the stock market, multiples, some you could agree are extended there, but we're not overvalued by really any historical stretch here. So you could argue that a pullback, whatever ends up happening, is a buyable one, and you kind of saw people trying to do that towards the end of the day. I would hope there's a little more left on the bone if that's what's going to happen. All right, so the S&P 500 still in first year to date. It's up about 15.5%, even with today's pullback there. Started a little bit lower today and then just kind of faded like most other things out there today. When tech started to pull back, everybody else went towards the defensive areas, the dividend areas that we've been talking about there. A couple stocks to point out, Norwegian Cruise Lines, NCLH, come on, type it. You've got essentially a parabolic, climactic, falling knife sort of thing happening on Norwegian Cruise Lines. They're very extended here in the short term. I would also mention Carnival Cruise is in the same boat. Ha! I did. It wasn't on purpose. I did that. So Norwegian Cruise Lines, Carnival Cruise Lines, very extended to the downside. Little bit of buying coming in today in both of them because of the overextension. So technically oversold, a recipe for maybe a little short-term bounce there, or hopefully you can get that. Humana saw a little bit of a boost there thanks to United Healthcare's earnings. United Healthcare is the second largest in the healthcare space by weight, anyways, and so they had a decent day today, which helped some of the stocks that are correlated to that if you're looking in the S&P. If we look at the NASDAQ here, tough day, really, basically due to Apple, Amazon. Oh, that's not working. Apple, Amazon, NVIDIA, we haven't talked about yet. Good pullbacks here in semiconductors. If you want to look around for ideas, semiconductors overall very strong. Pullback would be considered to be buyable there. You got some news on the semis, maybe producing more. We'll talk about that in a second. But semis are still weak there. Bright spot, biotech. No, I can't type today. Moderna hitting new highs following up on yesterday's gains. Amgen, it's choppy, but also one of the stronger ones inside of the NASDAQ today. And Regeneron Pharmaceuticals, finally a more convincing bounce off of lows there. I know some of you have been waiting for that. I've gotten a lot of emails on Regeneron, actually. But the NASDAQ remains in second place year to date. The Russell 2000. Here's your pullback, right? This is a buyable pullback as well. I said yesterday and the day before, if you're looking for ideas, you're looking for places to go, stocks to pick. It's a stock picker's market right now. Everybody doesn't want to be in the index. They want to pick stocks. And so if you're looking, you go in small cap. Small cap growth is the place that you want to be if you're looking inside of there. A couple stocks that stand out. American Eagles maybe starting its pullback here. I got earnings coming up later in the season, so just careful there. Upwork, you know who they are. It's an aggressive pullback that you wouldn't be excited to dive into now. A lot of the weakness, obviously, from yesterday and today. If that could continue, maybe under 45 or something, gives you a reason to at least, consider taking a shot. Shake Shack, down 5% on the day. Earnings coming up on that one. You check. I didn't catch that one for you. But Shake Shack, one of the weaker stocks here today. And 3D. These guys make 3D printers, that use the plastic to make objects and whatnot. 3D down about 4%. Healthy pullback here from around 40, almost down to 25. So small cap growth stocks continue to be the ones that are pulling back, maybe something to look at. All right, looking at the Dow here, the Dow held up basically the best most of the day. You can't argue with the Dow. United Healthcare was one of the reasons that it did hold up there. They had earnings, of course, that we'll cover. Honeywell also in there, almost making new highs. Just a couple pennies away. And I would say Home Depot played a role in that today as well. About a 1% gain. Overall, tough to make a new decision on Home Depot, if you ask me. But if you own it, you're in a holding position, I would say. Now, the Dow, there we go. So the Dow is basically holding tight for the last 4 days, which means, has our leaderboard changed much? Maybe Cody will take a look.
Yeah, we got 5 new names on the Guest Dow leaderboard today. We got Victor, Brent, Connie, Helen, and Guido there. So we got our new top 5, completely new there. If you want to play, you can go to jazzwealth.com/guess the Dow, and you can get your guess in by Saturday to play next week.
And are you going to show off your running? Are you running for?
Yeah, I'm running for president. So, I'm just running for office. I haven't figured out if it's president yet, but we got the official stickers, so I think it's
Cody 2024.
It's official now. Can you see it on there?
There you go. Yeah. So everybody now can ask your political stance, huh? Cody for really anything. You're running for any form of office there, so you can get involved in some of the insider trading, right?
Of course. Yeah, that's kind of the main reason we're doing it. Just trying to, kind of like a side hustle, trying to just make a little extra money there.
And how do you feel about the current issues in Cuba?
It's just there.
It's just
they're doing their thing. We're doing our thing. is what it is.
And what about the economy in general? What's your stance on that?
Kind of similar. It's just kind of there doing its
Just
thing.
doing its thing. Okay.
We're doing our thing. They're doing their thing.
Does inflation bother you at all?
It could at times. It depends. We'll take a hard look at that and see what our position is in the future.
And probably got to cover immigration. Immigration.
Yeah, same thing. Those people do their things. We're doing ours. We'll take a closer look at it once we get into office. Then we'll figure out what we're going to do.
Like it. Take it or leave it, sort of thing. Okay.
Yeah.
Okay. Well, there you go. That's official. We'll see what happens. Hey, what about California? You want to run? You could go to California. I hear they need a new governor. That's a scam. That's probably one of your robocalls getting me to vote for you. You go to win? Yeah, just anywhere, right? Okay. He's just in for the W. That's basically all it is there. I love it. Okay, let's go to the sector breakdown. Actually, let me show it with you real quick. I don't think we have much. Earnings tomorrow, what are we looking at? Kansas City Southern, so down here at the bottom. I've been sharing this with you all week. Kansas City Southern, we've got focus on that one is going to be on costs, really, right? So we know they're transporting the devil out of stuff out there. What are shippers paying for transportation? Is Kansas City Southern benefiting from that at all? And State Street be the most volatile of the day and, of course, of the week. As I've shown you here, it has the widest range, but State Street overall is pretty volatile anyways. If you own it, we've owned it in the past, and it can be choppy. So it's a bit of a bronco to hang on to there, but that's what we have for earnings. So not a whole lot. Don't sweat the earnings thing coming up tomorrow. Let's go back to the sector breakdown here. Not too much for you here today. Just want to point out financials. They have been pulling back in the short term. We're done with the large banks' financials anyways, so we didn't get anything, right? There was no excitement. There was no, hey, we're beating on earnings like crazy, which really wasn't the case. So nothing new to determine there, I think, in the financials. If you look around today, I've already mentioned semis. We didn't mention retail pulling back a little bit. Energy continues to pull back. That's a buyable pullback if you're looking in there. Finally, a little weakness in tech. Don't go anywhere near that, in my opinion, for the moment. And consumer discretionary, also nice little pullback there. To the upside there, I want to point out real quick the move into defensive dividend type areas. That continues, right? You got consumer staples, utilities, and REITs all doing well today. If you look at REITs, they're almost back to new highs there. And of course, utilities, I believe, is one of the better performers here in just the last couple days. Great day for that one, actually. So we'll move on over to earnings for the day because you got a little bit of that. I'll start with Taiwan Semiconductors because we happen to own it. So a little bit of a brutal day here. Gross margins missed, but it was a small miss to me. I mean, I'm not going to be biased because we own it, but it was a small miss there. And they're going to expand production of the chips that go to automakers by 60%, so year over year. So it's a huge bounce there in terms of production for them. Hopefully that translates into better earnings going forward. Morgan Stanley, the latest big bank to report, they beat on wealth management and investment banking, I believe, is where the two areas were that they beat. Wall Street Journal came out and backed them, said still have plenty of room to run, up 35%, doesn't matter to us. We think there's still more to go there. Truist Financial, that was the SunTrust and BB&T. We had, I think we had both of them here, but those two companies got together. That's now Truist Financial and has been for quite a while there. Beats on earnings by 36%, but again, some of the problem with financials here is the reason they're beating is because they're putting back what they had taken off their balance sheet for the COVID loan loss provisions there. But anyways, they raised their dividend now 48 cents, I believe, was what they went to there. United Healthcare, I just thought it was kind of funny. They revenue beat by 2%, earnings beat by, call it 6%. No guidance this time. Remember, they were known for giving guidance. But they said, hey, we would have made more money, but more people went back for elective surgeries than had in the previous quarters because they canceled elective surgeries due to COVID. And they said, more people went for these darn elective surgeries, and that cost us a little bit more. So we didn't make as much as we thought we would, but we still made some money there. So all in all, it was good for United Healthcare. I just thought it was funny they were sort of upset by that. That's your job. Pay for it. U.S. Bank. They beat, we own this one as well, so that's kind of a helpful offset to Taiwan Semiconductors. They beat mostly due to the loan loss provisions. I mean, it's the same thing. We saw that in the banks. They were expecting to have to write off $2-3 billion. Nope, turns out it was only $1 billion. They go put the money back, makes them look better than they really are. So it's kind of an odd time. BNY Mellon, BK, ticker symbol there, plans to buy back about $6 billion in shares. And I think it's approved. I think they're good to do that there. Penske, yeah, there's Penske. Penske says they think that there's actually a lot of positive analyst ratings on this one, but they said they think that earnings are going to come in stronger than expected. Gave you a little heads up there prior to earnings coming out, so not really an earnings stock, but that's what you have. Stocks in the news. Here we go. There's going to be some fun ones today. Let's see where you stand on this. Alphabet comes out with a new way to delete your iPhone history over the last 15 minutes. And so why would you want to delete your search history over the last 15 minutes? Well, you guys do what you got to do. But they say it's maybe you're shopping for a loved one and you don't want them to see what you're shopping for. So now you can go in and delete it there. Obviously, it's not a stock moving type thing, but they're in the news. So if you happen to be shopping for a loved one and want to delete your history after 15 minutes, now you can do it. So we're just touching that side of things here today. Casper, these guys make the beds that they send to you in the mail, and you do your thing. A lot of competition for that. They're partnering with Bed Bath & Beyond. BBBY is the ticker symbol there for distribution. So maybe a good thing for them. Stock didn't really move on the news, but that's good news because how much you're shipping beds through that? We know shipping costs a whole lot more, and these are not small objects you're shipping through the mail. So maybe a better partnership for them to help bring their margins up a little bit. I don't know. Netflix is focused on gaming, right? So I don't think that's new news, but Bloomberg says they're expanding into video games. They actually hired somebody to lead that division there. So does that hurt what GameStop's trying to do? Can Netflix just do their thing? There we go. What was the other one there? Honeywell is actually being added to the NASDAQ 100. They're going to replace Alexion. Alexion Pharmaceuticals getting the boot, so stock's down about 3% there, and Honeywell's taken over. Delta in the news today, not because of anything interesting or exciting. One of their own pilots are suing them for, he says that they stole his crew briefing app that he came up with. And he said, I talked to them. They said they'd be interested in buying it. They didn't say anything. Some time passes. Poof, they have their own app. And he said, it's a carbon copy of exactly what I created. Now, he's a pilot for Delta. So he's flying planes around for Delta. He's pissed at Delta. He's suing them for $1 billion because he claims that they saved more than that. I don't know. I just think that's kind of interesting. The stock didn't really move based on that news, but that is what you have there. While we let the stream catch up here, what else do we have? The New York Times says the used car market is officially insane. Car dealers can't keep up with demand. Why would you buy a car right now? We just did the CPI numbers on Monday. Car prices are up 45%. Little financial advice for you. If we're up 45% and you go buy a car now and you get a loan, let's say for whatever reason you get a car loan, and then the demand dries up, so car prices fall. You bought something that's worth $10,000, but you paid $14,500 for it. Just to make simple math here. All of a sudden, demand dries up. The car's now worth $10,000. You owe $14,500 or something close to it. What happens if a year passes? Now you owe $9,000, or the car's worth $9,000. You owe $13,000 on it. What do you think happens? That's really going to hurt people in the long run because now you're going to go back to the dealership so many years later, get a new loan, you're upside down on your car. Interest rates are now higher, so your payment's already higher because you're upside down, and it's higher because now you have a higher interest rate. There's a little bit of a time bomb there, right, for some people. So be careful on that. If you don't have to buy a car now, why would you buy a car now? A used car in particular? Joe Manchin said, this is a little frustrating. So Biden, of course, they want to pass a $3.5 trillion infrastructure deal. Love it or hate it, whatever it is, $3.5 trillion. And my argument is, how are you going to pay for it? Give me some numbers. And they generally said this is how we're going to pay for it. Joe Manchin, and I don't know the guy. He's a senator. I've heard the name for some reason, but I don't know the guy. He says, well, just repeal the Trump tax cuts. Oh. Okay, well, now I have something to talk about, right? So just repeal the Trump tax cuts. So in order to pay for infrastructure plan, let's just go tax every American right away. That's like $10,000 per person if you add up everybody. What? Let's not do that. I don't like that plan. I'm sure he's a nice guy, but I don't like that plan. Let's come up with something else if you're going to spend that kind of money. So I can't imagine he's getting a lot of love on the old social media there. And that's pretty much it. Yeah. So I'll see what you got there. Question-wise, happy to help. Oh, Janet Yellen said she now has 132 countries on board to tax 15% minimum tax. And her comments were that this stops the race to the bottom for countries that are trying to compete for big business, right? So they've essentially fixed the tax rate there. Don't know how you feel about that one, but if I owned a fishing pole company and I went to another fishing pole company and I said, hey, let's fix our prices so that we don't go any lower than this, I have a feeling we would go to jail. I'm just guessing there. We will see. Let's see what we've got here. By the way, on Monday, there will be no show. I've been invited to kind of a cool meeting. We got Barron's is going to be there, and the largest advisor in all of the country has asked us to come have a chat with him. And I'm told there's free drinks. So, yeah, we'll be able to do that one there. We will see. Do I even own pants, or is it all shorts? Well, it's Florida, right? I think I have some pants hanging up in the back for when it's cold or something. I might have to wear pants on Monday. I don't know how that's going to go. Maybe get some new shoes or something. I don't know. Can't show up like this, can I? I love it there. Sorry if I missed your question there. Got a bunch coming in. What is the aggregate miscellaneous equity within a mutual fund? I noticed PRGFX has about 6% holding listed in this way. A T-Row guy, what is the aggregate miscellaneous equity? Usually, if you're looking it up on, what would you use? Yahoo or something like that. If it's an international corporate bond or something like that, in the U.S., they may not be able to get that quote. So if you're looking up what are their top holdings or what are all their holdings, if they can't get the quote, then here in the States, or if it's too costly to get the quote, in the States here, they'll just say it's miscellaneous. It's sometimes they'll even call it a version of cash. So it could be that, if I'm understanding you correctly. And trust me, I know how much data can be. We're going through a little bit of that ourselves. Yeah. Tandra wants the recent markets pullback. You're seeing a lackluster common. It's very common in the summer. So exactly what you're saying. You nailed it. So over the summertime, your different technical indicators that you want to use all of a sudden become skewed because now less volume is driving the action on whatever it is that you're using. So again, another point for why don't we only focus on the stuff that everybody's focused on, because otherwise you get a lot of false readings in there. So a little bit tough. Now that being said, there has been, over the last couple of days, there's been more, how would you say it? There's been more stocks, assets out there that have seen negative prints than positive prints, and yet the market still remains at these highs. So that number is building little by little, which is the breadth that you're talking about. Mm-hmm. I think the child, is that today? Child tax payments are going out too, I believe. Yeah. California wants to pay if you're not working. Yeah, I don't know. It's on that side. I'm not sure what they're doing over there. I love it. Is Nancy's portfolio public info? It sure is. Yeah, it's a little delayed. It doesn't have to be up to the day. I think it's 30 days that they have, but it is, and it's highly profitable. A lot of people actually follow it. Yep. You've got ADM. All right, so you've got a little bit of a pullback here. ADM, August, 59.50 calls, average $1.45. So, yeah, I have no problem with that. You probably just started it, it looks like. So, no problem with that. You're contrarian. You're playing the pullback there. And you have plenty of time. You didn't buy any out-of-the-money calls. I mean, it's a little bit right at the moment, but that's just the day. So I have no problem with that. Thoughts on how the market would react for this news? U.S. Fed funds futures price in a 90% chance of rate hike. And I think that'd be normal. Yeah. If it's, I even think it could have an earlier date than that. Fed's been pretty clear that they're talking about tapering. So, and they said he's going to give plenty of heads up before they do anything. He said that yesterday. So, how they plan to do that, I wish they wouldn't talk as much, but they do. Yeah, I love it. And who's next week, the space launch there. Jeff Bezos going to space with his brother and Wally. That's cool. And who was the other person? There's a whole thing with the other person. Oh, man. Drama with the fourth person that's going to space there. But anyways, that'll be fun to watch. Well, Wally's the female astronaut, yeah. She's the third one. But there's somebody bid and then they can't go. They might send their son. It's a lot of money to send your son. Yeah. So it's not the winner of the auction. $28 million, by the way. Yeah. I bid 27. I didn't get it. Yeah, that's the problem, though. It was $27. Hey, why have goofy stocks not bounced on all the Schumer news? I believe you got at least a little bit of a rally. I know Tilray came out with some comments today. A little bit of the sell on the news, apparently. Does it get done? You know what I mean? It's the odds of something so big getting done. This has been talked about in the past. Does it get done? I think that Congress is in the best position ever to get something done, especially being proposed by Democrats there. So maybe there's a chance. I don't know how they work that through. That part I don't know enough about. I'd like to see it happen for these stocks because personally I don't think it would be a long-term benefit. I think it would create so much competition that a lot of these stocks would have to consolidate in some way. I don't think there's room for everybody. So maybe that's part of it, right? It's just already, if you're in that category, there's already a surplus out there. What do you do if it's legal all of a sudden and everybody can officially be paid and banks can accept the money and all this great stuff? What kind of competition do you think there would be then? It'd be crazy. And there'd be a mad rush to consolidate and just dominate, like Altria and Philip Morris. Remember that whole thing from years ago? Yeah. You bid to get a Hunter Biden painting. So you're the one. Yeah. What year is the pic? Oh, maybe you saw a video or something. You mean the actual truck is 1941. Yeah, 1941 with the pine bed. Uh-huh. You guys are funny with your comments there. I like it. All right, so I think I've covered it there. I'm going to get ready for our class here tonight, put the final touches on what I'm working on for you guys. Rebalancing the data. I love doing things where it's not my opinion, it's data. You take for what it is and accept it or whatever, but I love focusing on things like that. My opinion to me is irrelevant, and it's all about the data. So we'll be covering that here in just a couple hours. I'll see you there, and enjoy the rest of your day. Adios.